Hi, and welcome to the latest in the Moretti and a catch-up session. Over the last few weeks, what we've done is we focused very much on getting cash into the business. A couple of weeks ago, we spoke to David Tuck, who's the CEO of Chaser, a piece of software that Northern Accountants recommends for all things credit control and virtual credit control. Last week, we spoke to the legend that is Ian Hayes from Bibby Financial Service. I think everybody in Leeds knows who Ian Hayes is, and a great guy in that. And today, we've continued down the route about getting money into the business, and what we've done is we've brought a great a friend and contact of Northern Accountants, James Robinson, in from STap Asset Finance. So welcome, James. What have we got to drink today?
Today I have got some water.
Water.
I have, yeah, much out of character. But
thanks for coming on anyway. So we'll just end it now, shall we? I can't have you on our professional list if you're going to start drinking water. So no, but no, I understand. It's understand. So okay. Then, by a little bit way of introduction, do you want to give us a little bit of an insight into STap Asset Finance and a little bit about you and how you got into the world of asset finance?
Sure. Yeah. So STap Asset Finance has been going just over a year now. I'm part of the AFS franchise, which means I've got access to about 85 different lenders. And I provide asset finance support across the UK for businesses of any size, shape, location, and it literally is anything you can touch. So I can get a cafe ring me up for a new coffee machine. I can get a manufacturing company up looking to put a new production line in. It is literally anything from those sort of parameters.
Right, brilliant. So obviously, like I say, we've touched on over the last few weeks on these sessions about helping getting money into the business, and obviously asset finance is a way of doing that. Just before we go into those sorts of things, do you want to talk about how the market's changed from the start of the year, pre-COVID, to what's happened during COVID, and now what's happening while we're trying to come out the other end of COVID?
Yeah, of course. Well, we're quite sensitive, as you'd imagine, because everything that people buy is due to their confidence. So if they're doing well, we'll be on their radar because we're a derived demand. We're not needed if people aren't buying things. So first couple of months of the year going well, beginning of March flying, to be honest, with a lot of people doing a lot of business. And then obviously the brakes got hit massively when the lockdown started, and that had an impact on people. A lot of the planned purchases sort of went out the window a little bit, but the essential purchases, the things that people needed. So if it's a man with a van, that van needed replacing, it had to be replaced. So essential purchases went on, and non-essential sort of got put on a back burner, as you'd expect. I think to a large extent, people were doing a bit of damage limitation, so they wanted to get payment holidays to start off with, just to make sure that they got a bit of breathing space with cash flow. And that's sort of the first couple of weeks, that's where my efforts were, just to get people into a position where they felt supported and felt that there was going to be a bit of positivity amongst all the uncertainty. But then as the weeks and months have progressed, and it is months now, people seem to be getting a little bit more buoyant. As with everything, there are winners and losers in every situation. So there's some customers that I've got that are absolutely flying and have been throughout. There's some that have dipped a little bit and are going back up. Lenders have tried the hardest, because obviously, as everybody has been, they've had to work from home as well. They've tried the hardest to offer as good a service as possible under the circumstances. As we see a return to them going back to the office now, service times are getting back to a little bit more normal than they were. So it's been quite an interesting few months.
Yeah. And do you think there's a bit of you talked about people becoming a bit more buoyant, a little bit more confident at the moment. Do you think there's a little bit of false economy out there with all the C-bills money that's flying around, the bounce back loans, the furloughs and stuff like that?
Don't even get me started on that.
Right, I'm going to push on that then. We'll go down that route in a minute, but carry on.
Yeah, that's a couple of hours rant there in itself. It's one of those things, isn't it, where if you're in charge of the economy and something like this happens, it's nothing that you can control. It's a worldwide pandemic. How do you put things in place to support people? And no matter who was in charge, who was doing what, they've never got it right first time, and I don't think anybody can. It's nice to see them put interventions in place, and it's great to see the broker community really responding to that and supporting businesses to make sure that they're getting through as best they can. I think the business bounce back loans are possibly a massive own goal, and I think to some extent there are people taking money for the sake of it that they don't need, and I've heard a lot of stories of people buying things that they really shouldn't be buying. Non-business related, I've heard about Caribbean cruises being paid for, deposits on large sports cars, and yes, it is the cheapest money that people can get.
Well, it's not if you put a 32.5% dividend tax on it, and that's one of the things that will happen if the director's loan account's in the wrong place. That 2.5% interest is 32.5% dividend tax at higher rates. So there could be quite a few people in for a shock come self-assessment time in a year in January.
Absolutely, and that's what I'm thinking. I'm thinking in 12 months' time, there's going to be a lot of businesses who've got a situation that they hadn't planned on, didn't think about, because they got carried away in the euphoria of here's some free money, we're in a bit of a panic zone, let's take it for now and worry about paying it back later. And I think the loan word of business bounce back loan has been overlooked, or people have been not to see that bit, they've seen the BB and not the L at the end. So I think it's going to be an interesting time in about 12 months' time.
Absolutely, because that's when your repayments start to kick in and things like that. And I know there's a lot of, that you hear of unscrupulous businesses who are taking their loans with no intention of repaying it and basically going to bounce the company. I don't think that's quite what they meant by bounce back loan, but yeah. So I think, we spoke with Martin Willick a couple of weeks ago. Martin, and like he said, there's going to be some severe consequences for people that do that. So like you say, I think it is really, really important that people who have taken the bounce back loan, and I do believe that people should have taken the bounce back loans, but as long as they use it in the right way. So I do think that they should do. For those that have taken it the wrong way, let's hope that it doesn't come back to bite them in the proverbial. So one of the things you started to go on, and you said there was going to be a bit of a rant, was the CBILS. So I saw the red flash in your eyes when you talked about CBILS. So it wasn't on my list originally, but I've written it down, so I thought I would ask you about it today. So now you've mentioned it. So what's your views on the CBILS and the situation that's put you in as a provider?
Well, I think so much the CBILS where I saw red, it was more the business bounce back loan. I think the CBILS has obviously had to be managed a lot tighter, and there are a lot of hoops to jump through to get through to getting the CBILS, and I think that is a good thing. But the business bounce back loan with the sort of self-certification side of it,
it screams the crash of 2008 when you could self-certify a mortgage, wasn't it? And everyone was getting mortgages on the $250,000. I think it was stories in America where people without jobs were getting $250,000 worth of mortgages, and it's like, well, that's going to crash soon enough. So yeah, no, I'm with you on it to a degree, if I'm honest. But yeah. So.
Like in a food shop and saying you can take as much chocolate as you want and you can pay for it later, but you're going to walk out with arms full, aren't they?
And they're going to be sick eventually. Yeah, absolutely. So, okay, so obviously we touched on the CBILS and the BBL, and I know I pushed you a little bit there, which maybe shouldn't have done, but there we go. So how do you feel that asset finance can assist in what we're calling the COVID recovery time?
I think it's overlooked a lot of the time, whether that's due to people not considering it in the right way or people not knowing. I think asset finance is a common sense supportive mechanism for business. It's not an expensive way of financing things. It's not a last resort. It's not a sign that people aren't doing well. It's a really positive, supportive way of people buying assets that they want or they need in a cash flow friendly way. And then getting the benefits. The whole point I try to push is them getting the benefits from that asset sooner rather than later. So I could have a conversation with a business owner who'll say, I aren't buying this, I don't have the cash for it right now, I'm not buying it. And some people may say that's an outdated way of looking, some people say it's common sense, that's up to them. But if they save up for that machine and it takes them 2 years to save up, that's 2 years of not getting the benefit from that machine in terms of the efficiency, the output, the low unit costs, the potential increase in revenue streams that they can access from this new machine. And when you look at it like that, why would you not do that? So people drive around in cars now that they're financed because if they had to pay a lump sum out, they couldn't afford. And there's no shame in that. But to have that car, they take the finance. How is it different from in a business scenario with a business critical machinery that's going to add so much of a difference? So I I think really it's about having that conversation of what are you going to benefit by the most by getting this machine, or which pain points is it going to solve? And I think that conversation needs to be had with a lot of business owners. It might be asset finance, it might be something else, but just giving people the time to have that conversation and just take half an hour out of business to think, well, how can it benefit me?
Because I know you do that a lot, don't you? You spend a lot of time with our contacts, with your contacts, with people in there that you can't necessarily instantly help directly, but you spend that with, but you work within that sort of finance network, and you can pass things around to those other people where you've got trusted contacts that can help the business find the right solution. It's not just a case of flogging them some asset finance because you'll gain from it. I know you're very strong on that, and you're very ethical from that point of view, and that's commendable. So yeah, no, I do like that thing, that time that you afford people effectively just to help them out. And I think in this this current climate in particular, that's a massive compliment to you, really. So yeah, so okay then. So we've talked about how it can help. So just for not everybody, and this is going to sound daft, but there's no, it shouldn't be daft, but not everybody knows exactly what asset finance is or how it works. Do you want to give us a quick 30-second sort of pitch about how it works?
Great. So usually a customer comes to me with a need, whether that's a need that they've managed to sort of fill themselves, or they're contemplating solving a problem. So let's say, for example, I work with a company down south who was an onion peeling, pickle company. So they needed lots of onions. They were doing it by hand. They got 4 members of staff. It was really time consuming, and they replaced those 4 members of staff for that function with a machine that peeled 240 onions a minute. So they'd seen the need for that machine. They'd seen how it's going to benefit, how it solves pain points. They've sourced this machine through their network of contacts within their industry, because obviously I can't have an encyclopedic knowledge of every industry, suppliers and what machines do. Although I do learn a lot of random stuff about random machines. They'll come to me, I'll have a conversation with them, take a few details, send them a quote via the automated system I've got, which is awesome. It's all FCA compliant, so the customers have got peace of mind knowing that it's compliant all the way through. They look at the scenarios that I've sent them, they make a choice, and at that stage, contact the supplier. Before that, contact the lender, get the deal proposed to them. Once it's passed, contact the supplier, invoice is raised, I raise the documents, get them signed with the customer, usually face to face, and then within a couple of days, the funds are released.
And that funds are secured against the asset that they've purchased?
Entirely against the asset. The customer doesn't see the money themselves, the supplier gets paid on day one. Flipping it on its head, for people who are supplying things, it's fantastic for them because it takes away the credit control function, because they get paid on day one in full.
I know a lot of businesses who operate on that kind of level. So we had Ryan from Redefined, and he offers fit outs now on finance for people. So it removes the barriers from people from actually doing the things that they want to do, because the suppliers get paid, like you say, on day one, and they can then carry on with their businesses, and then the client and the customer benefits from the output from the off. So that's excellent. So go on then. What can you finance?
Anything you can touch above £1,000 to £2,000.
So anything you can touch from above £1,000 to £2,000.
Yeah. So I'll tell you what. I'll give you a good scenario.
Okay.
I was holding a project down south for a leisure centre, and they contacted me to say, "Will you finance what you can on this project?" Assuming it'd just be the weights machines, the exercise bikes, and the TVs and the audio visual and stuff. So I said to my contact, "Right, well, where do you want me to start?" I said, "What do you mean?" I said, "Well, you sent me the diagrams and the drawings, beautiful 3D drawings of what it'll look like. If we go through the front door, I can do the door entry system. I can do the CCTV, the fire alarms, the telephony, the air conditioning unit. I can do the front desk, the furniture, the kitchen equipment, extraction system in the kitchen." And then we just went down the entire building and said, "Well, this is what I can do." And he was absolutely blown away, because he just thought, "All right, well, we'll finance the exercise bikes and stuff through James, and then we'll try and get a commercial loan or whatever for the rest." Look, I can do all this. He was really surprised. And I think that's the thing where the conversation needs to take place, because people don't realise the extent to which I can finance the variety of assets I can finance. I can even do CRM systems, which you can't physically touch, but that's
That's
in my
interesting. So basically, if they build a CRM system, you can finance the building of it, and I can claim back all the tax on the R&D. That's an interesting combination to explore a little bit more, isn't it? That'll give some people some reasons to maybe go down that route that they're thinking they couldn't do before. So that's interesting. So you said the minimum value is £1,000. Anything above £1,000 or below, if it's below, it's not really worth doing, is it? I guess.
Yeah, and the greatest respect to any business, you've got to ask questions why some people can't put £1,000 in the pocket, and in the pocket and pull £1,000 out. So if it's a cafe, for example, they need a new coffee machine, it's going to cost £2,000. Yeah, that's a lot of money just to pull out, but it's a business critical asset. But for large businesses, see, it works on two different ways. You can do a balance sheet lend where the balance sheet's that strong that even if the asset's the most weird and sort of bespoke possible asset, the lender will take it because the balance sheet's so strong. Or you can flip it on its head where the customer's maybe not as strong as they'd like, but it's something really, really solid like a JTB that'll sell all day, every day. So they approach it from those sort of two extremes.
Yeah. So who can you help then? So we talked about what you can finance, which is anything really over £1,000. Otherwise, it's probably not worth doing it in the grand scheme of things. So who can you help? Is it just established businesses? Do they need a minimum periods of accounts or anything like that, like in many other claims to finance?
Startup businesses are fine, as long as the directors are homeowners and there's something in the background there, and they're happy to put a director's guarantee down. Startup businesses are fine completely, all the way up to well-established, and even Phoenix companies. So some Phoenix companies might want to move previous asset finance agreements into the new co because they need the assets. So I'd refinance those assets, put them onto one agreement through me, and then they've still got the assets to take forward into the new business.
And is it? Oh, I'm sorry.
So go on.
Yeah. So is it only new assets that you can finance, or can you finance existing assets?
No, existing. Yeah. So in terms of age, usually up to 10 years is straightforward. Anything after that, the amount of lenders I've got access to it is a bit more limited. But it depends on the asset. So, for example, the classic car could be 60 years old, but lenders will have an appetite for it. So it just depends. The good thing is about having over 80 lenders, you tend to find you've got a home for most things, and different people have different appetites and approaches. So So
even if things have been financed in the past, it's all been settled and it's still got a real tangible value on it, you can refinance that asset.
Yeah, absolutely. It's the thing is with the asset, people forget that it's a store of value. So once they've paid it off and once it's been written down on the account, really on paper it's worth nothing, but in reality it can be worth quite a lot of money. A lot of businesses, I predicted at the beginning of all this coronavirus that people would be refinancing the assets that they've got and pulling money out to support them. That's happened in a few cases, but not to the extent I thought it was going to happen.
You think it's because people don't realise they can do it? Is it a lack of education in that opportunity that's out there, or do you think it's that? Yeah,
I think it is. And it's a difficult one, isn't it? Because I know for the last 4 and a bit years I've been banging the drum on trying to educate people on asset finance, but I'm a little, in the big scheme of things, I'm a little fish in a little area. I can't educate everybody, and it would be great if more people had access to just finding out more about asset finance and how it can support them, because it's not just about the purchases where we make a difference. It is things like refinance. It is a situation where I've come across in the past where negative situations arrive with the director and they want to pay them off. They want a lot of money. They don't really want to put them on a payment plan, but they've got a load of kit. So they refinance the kit, pay the director off, they've gone, problem done, and pay it off over 2, 3, 4 years. And it's just little things like that where if you don't have a conversation, you don't know how you can help.
Yeah.
You don't know how you can help as well.
Yeah. So what's the strangest thing at your finance then?
A fly tie machine. So I've got a client who does fly fishing materials up in Yorkshire, and they financed the machine to tie the flies. That's the way it's actually done. Yeah.
A fly tying machine. I didn't know what you actually said when you first said it, but wow, okay. And I'm sure there's many other weird and wonderful things you probably could talk about if this wasn't being streamed live on various social media platforms as well, I would suspect. I've had to tell those stories in a closed platform, so I know there are, so don't go all calling me now. So going back then, so we've talked about, obviously, you can basically finance anything you want. You can do old, you can do new, you can do refinances. Minimum value really to make it worthwhile for them is about £1,000. What sort of deposits are people looking at for these things? Because that can also be a consideration as well.
It's a strong point. Sometimes you can get away with just the VAT,
which you could then reclaim at purchase as well.
Absolutely. Let me rephrase that. Prior to lockdown, we could have got away in some cases with just the VAT. Lenders are, as you'd expect, a little bit more on edge at the moment. That they're wanting to see some contribution from the client. So I would say, as an average, and it always has been, 10% is usually there or thereabouts. If you wanted to do higher purchase, they have to find the VAT, which you can turn back, or if they're doing a lease, they pay the VAT as they go along. So for those who don't want to find the VAT straight away, that's an option for them to consider.
Obviously, you've got multiple different products that deliver different outcomes and things like that, haven't you? Yeah. Did you want to give us a couple of different examples of the different types of products that you've got to offer, the main ones that that people might benefit from?
Yeah. So basically, it's just hire purchase. It's the lease option, and then it's the refinance. I just try and keep it simple. There is a sort of a remedial sort of option, which is called sale and HP back or sale and lease back, where customers bought something and something's happened and they thought, oh, we've overstretched a little bit by buying that. We shouldn't have done. So up to 3 months, we can go back and put them on an agreement as if they've done it from day one. So the rate would be the rate that they get from day one. Refinance tends to be a little bit more expensive, but this is a good way of the customer getting the money back for something where, it's like some people are ploughing along and something happens, a curveball from an external factor that it puts them in a difficult position. So that's a good way of getting people back on track.
Okay. So why would people come to you instead of a bank or their bank, for example?
It's a bit of a tricky one, really, because I do work quite well with some banks, and I do get leads from them where they haven't got the appetite, or probably shouldn't say they know they can't do it quick enough, but the customer needs to move quickly.
I hear that a lot from bank managers themselves, that they can't do it quickly enough. We work with quite a lot of bank managers, and because it goes through the vigorous underwriting, they just say, look, if someone this needs to be done quickly, we can't do it, so don't go place it somewhere else.
Yeah, and that's all because the bank manager says, well, I don't want the customer looking somewhere else. If I put you in, it helps sort of protect my customer a little bit on my terms, and you can turn it around quickly. So it's the speed of service. It's me, and I'm not bigging myself up here, but when you ring up, you speak to me.
Yeah.
You don't ring up a number that somebody else has had 3 months ago and they've left and moved on to a different department or moved somewhere else. So once I get to know my customers, I know the buyer changing. It's not going to be Jake 1 week, Jonathan the next, Peter the week after. It is just me. And that's a lot of people like to know that person does this for me, this person does that for me. Not it's this company or this bank, and I ring up and am I speaking to the same person I spoke to before? And with having 85 lenders, I've got the appetite, a much broader spectrum than some high street banks.
Right, brilliant. And what are the other benefits of working with you then, apart from just you?
It's a bit of a tricky one, isn't it? Somebody says, oh, I give excellent service and it's the speed and it's just stuff like that. From the feedback I've got, and I don't like saying this because I don't want to appear arrogant, but I do take a genuine interest, like you said. And it is that sort of personal touch. It is the time I take to get to know the customer, not on a transactional in and out basis, on a, right, we're working together, what are we doing? You know what I mean? How does this work now? What we're looking at medium term, what we're looking at long term. I'm not there to advise, but I'm just there to find out how this purchase or what they're planning fits in, and how best to support them throughout. So I think it's that sort of personal touch, I would say, that, or I would like to think, that differentiates me from others.
Absolutely, and I know when I've spoke to the clients that we've pushed your way, one of the things that they liked best about working with you was the way that you followed up. It wasn't done in a sales sort of patter sort of way. It wasn't done with a relentlessness and then just all gone quiet. It was a consistent and almost softly sort of approach, really. Just to ensure that these things do slip people's minds and other things take over. So I think, like I say, one of the big things that they'll compliment you about was the way that you followed it through and made sure that the deal went the right way for the client and not the right way for yourself necessarily. It went for the right way for them. So, like I said, I do think that's some great feedback on that sort of thing. So, okay, so we've dealt with what you can do and how you can do it. So, one of the big questions is, I suppose we might have even covered this a little bit, but I think it's worth reiterating is, why would people use asset finance?
I think it just gives them the peace of mind that they've got the asset that they want. They're not being given. So, like, if you went for a loan, you can spend that loan on anything. Whereas it's sort of puts the deal in it. It's sort of like a space, really. So you've done that deal on that asset. You've done this deal on this asset, and it just tidies everything up a little bit. On that side, yeah. And I think when you look at the assets themselves, a lot of businesses forget how much they rely on those assets and how much of an impact it has if it goes wrong, if it needs servicing more than it used to do, if it's not as productive. And I think asset finance means that people have got that opportunity to afford to change assets probably more than they thought they could, so that they're getting either another better version, or for example, like a van. If a tradesman turns up, or tradesperson, should I say, turns up in a knackered van, with the greatest respect in the world, that 7-second window of making an impression, you can, oh, well, it's a bit crap. Are they any good at the job? They might be amazing.
Yeah.
If it's in a van that looks for business, straight away you're thinking, oh, hang on a minute, these look a bit sharp. And even things like that adds more credibility. So it's a good way of businesses keeping on top of assets, keeping themselves modern, keeping themselves competitive, and in some cases ahead of their competitors, but in a more affordable way.
Yeah, absolutely. I think going back to the point you made about perception and about that first impression that you make on people, I think that is fundamental. We used to talk a lot about those sorts of things and how you could improve your sales conversions and all those sorts of things. And again, presentation and the demonstration of value is hugely important. And I think it's often massively underutilized by business owners when it comes to successfully growing the business. So I think you make a brilliant point there. So great. The next thing I wanted to really touch about, and you briefly mentioned it, but fortunately you went a little bit off tangent from it, which was pleasing for me because it was one of my written down questions. Was we've dealt with the how and the why. So how do you deal with the attitude of people? If I can't afford it, I'm not having it. Because you get that. I see that day in, day out, and I'm not saying it's wrong. Well, maybe I am saying it's wrong if I'm honest, because I think it's a little restrictive. But what's your view on that sort of attitude?
It's a tough one, isn't it? Because it's not my job to push people into something that they don't want to do. And I'm quite respectful of people's opinions in terms of that. As frustrating as it can be, because obviously that means I don't get the deal if they say, well, if I can't afford it, I'm not going to have it. But it sort of unlocks the door for me to have a conversation of, right, well, I respect your viewpoint, but being devil's advocate, what benefits can you bring in by having this asset? A good deal I did years ago before I set up on my own when I was working for somebody else. There's a guy that wanted a coal bagging machine, or he looked into it and he wasn't sure. It was £250,000, which is obviously a massive investment to the business. And he was like, oh, well, do I want to, do I not? I asked the bank for a quote 12 weeks ago. They've not got back to me. It's really sort of adding up that I can't be bothered with this. So I had a quick chat with him and I said, well, why do you want this? Because you've been going for years as a coal merchant. Why would you want this all of a sudden? And he said, well, I've got a team of lads and they don't always turn up. When they do turn up, they bugger about a little bit. I might get 2 tons an hour out of them to start off with. by the end of the day, they're tired to do over a ton, and that's when they all turn up. So he's just telling me this story. I said, well, how much do you pay them? He said, well, about 15 grand a year. I said, right, so let's say 60 grand a year then. Right, fine. So we worked out that the payments on the coal bagging machine were less than he was paying the staff per month. So that was just a basic, just basic conversation. And I said, well, in terms of this bagging machine, what did it do? Oh, it does 10 tons an hour.
So it's 5 times as efficient and less price.
Yeah. So he then thought, all right, hang on a second, this is starting to add up a little bit. And then we had this conversation, and I left it. As you said, I don't push people because I hate sort of, you know what I mean, fake tan and gold chain sales type approach. And he got back to me and said, oh, I spoke to my coal supplier, just based on what we'd said, just to see if I could get a cheaper price per ton on my coal. I said, oh, great. He said, well, we're quite open to that conversation. I'll be doing more coal through it, but they asked me why. It turns out that their coal bagging contractor wasn't doing the business. So not only did he get this machine that was 5 times as productive, he was saving money on that. He got the contract for his coal supply for bagging for them, and the storage revenue, and the lower unit cost on his coal per ton. But this was the guy who was going to say, no, I can't afford it, I'm not having it.
Yeah. Like I said, he was wrong, wasn't he?
Yeah.
No, you know what I mean. You know what I mean. I think I think the key message there is that you took the time to educate him about that thing, and I think attitudes are changing towards debt. I think a lot of people are scared of debt and are scared of the impact of debt, but ultimately, if you're going to build, in most cases, not in every case because there are exceptions to the rule, but in order to build a business and to build a successful business and a profitable business, you need to invest in it. So unless you've got an angel behind you or someone like that who's just going to pump money in, you've got to find ways of putting that money in yourself. And asset finance is obviously a key way to do that. So I think you're right. I think it's an important thing. So okay then. So I'm sort of not a million miles away from the end of where I wanted to be. So so if people are sat there today and listened to your explanation about almost the education process that I suppose you would almost go through with a client, but just on this platform rather than them direct, and they're thinking that this might be for me, what's the next steps that they should take?
Just get in touch. Yeah. I think with the current situation now, with the Zoom call, it's less intrusive. It's taking less time out of people's day. Just a chat. Just 5, 10, 15 minutes, even half an hour, just to find out what they're doing. Can I help them? Can I not? Is it something I can help with now or in the future, or where does it fit in? And I think with a lot of people, when I do a lot of networking, they say, I want to get involved as early as possible. That's the best thing for me. I get phone rings on a Monday morning and somebody says, oh, put a deposit down on a car on Sunday, can I pick it up tomorrow? And it's great because it's a deal. But I'd rather be involved, but not that I wouldn't like to do those deals, but I'd rather be involved where somebody's saying, well, I'm thinking about doing this, how does it fit in? Some rough ideas on figures as part of their plan, and just take it forward like that. So, coffee costs nothing, Zoom call costs nothing. I'm just more than happy to speak to as many people that need to have a chat as possible.
Yeah. So if anybody does need access to James, just drop me a note and I'll make the introduction for you. Not a problem. So like I say, I'm coming towards the end of my sort of thing. So really, before I ask you for your final piece of advice, are there any other points that you'd like to cover, or you think that we haven't touched upon that you'd like to get across in educating people about asset finance?
Yeah, there's just ways in which can make a sort of additional difference, if you like. So if any people out there have got seasonal businesses, asset finance agreements can be changed onto seasonal payments. So going back to the call example I gave you, during June, July, August, September, the payments will have, because obviously, well, hopefully the sun's out and everybody's warm and won't need coal. So we can do that to reflect the needs of the business. We can also do VAT deferrals as well. So if they haven't got the VAT straight away, we can defer it by up to 3 months to make it a little bit easier for them. If they're not quite happy with the deposit that they can't really put down, we do what's called accelerated payments. So first 6-12 months, the payments might be a little bit more than they normally would, just to give the lender a little bit more confidence that they've had more money coming in. But the business hasn't had to find a bigger deposit. So there's sort of ways and means of adapting the deal to meet the needs of the lender, but also the needs of the customer at the same time.
No, brilliant. So I really don't have much more to ask. Have you got any last bit of advice that you'd like to pass on there? You're good, we're running out of things to say. Have you got any last bit of advice that you'd like to share with anybody watching?
No, I just think if anybody's got any queries or questions, just pick up the phone, because we all don't know what we don't know, and there's no shame in that. But just have a chat with somebody, on this case me, if you've got any needs, just have a chat, see how it works. I'm more than happy to have a chat with anybody, and if it's for them, it's for them. If it's not, no pressure.
You had a nice cup of coffee.
Exactly. Yeah.
One sugar, isn't it?
Yeah. No milk. Yeah.
No milk, one sugar. Brilliant. Well, that's it from me then. I mean, that's been brilliant. That I've learned some things in there that I didn't realise you could do, like the seasonal stuff and things like that. And I do think it's important that we try to break down these barriers and educate people about all these different things. So, I'm not even going to read that comment. I think we've been spammed. So someone's talking about a cure of HIV, some genital herpes, and some diabetes. He's got a cure. Right, okay, fair enough. So that's the input we've had from our viewers today.
Bombshell.
And on that bombshell, all that leaves me to do is to say thank you so much for coming on and giving you the time up this afternoon, mate. I really do appreciate it. Next week, we're going to have a break. I'm having a couple of weeks off following the COVID period and things like that, time off with the family. So we'll be back probably back end of August, beginning of September for the next Moretti and a catch up. And I'm hoping to line somebody up to give them a bit of an interrogation about C-bills and bounce back loans, the pros and pluses, the experiences they've had, as well as, what other options are going to come out the other side of that, in terms of loan lending, following the ending of the C-bills and the bounce backs. So yeah, I'm looking forward to that. So once again, James, thank you so much for your time. It's genuinely appreciated. Someone's passed on their congratulations, saying well done, James. Apparently I didn't play any part in it or anything like that, just you. So well done, James. Have a great afternoon, my friend. Enjoy the walk, and I will see you soon.
Cheers, Phil. Take care.